All right. Hi, everyone. Ruben today from the 5ers trading room. It's going to be a webinar very interesting, talking about gold and silver. So I will wait 1-2 more minutes that the other people join the station, and hope that it will be very interesting for you. And let's say a lot of indication and learning from this webinar that I put a lot of work and mind in it. So hope you're gonna enjoy the session with me. Yeah, and if the sound on the video is well, so happy to read that. Yeah, this is the new trading room here at the 5ers. Invest a little bit in a microphone and in a very good camera as well, and some lighting. So I hope the environment is much better than we had before, and that's going to be the classic way to make a trading room here. So we want to improve our educational resources all the time, and you know, as you guys know, we really want that traders success, even it's a very difficult and long way. But we are here to support each trader that join our programs, and also trader that might be interesting. That's our goal here at the 5ers, that we want any trader to be successful in the long term. So hi everyone. I see some activity already on the chat from all over the world. So that's very amazing. We have Nazir from India, Stephanie from Florida, Edward as usual, Pascal is from Greece. So it's very interesting to see a lot of different people and different background coming and joining the session. Johnny from UK. Thank you very much for joining. That's going to be very interesting. Yeah, there is a lot of different UK, Bulgaria, Nigeria, Puerto Rico. Hola. I'm from France. My background is from France. All right. So let's start the session. Very happy that you guys are with me today. All right. Okay, so we're gonna talk about precious metals and more precisely gold and silver. That, as you know, we released gold and silver trading at the 5ers. That at the beginning, for the first week, it was for the bootcamp and seminar plan program, and for the second week, so at the beginning of that week, we also released gold and silver for funded programs. Okay, so actually everyone can trade gold and silver. So it's going to be the spot rate, known as XAUUSD and XAGUSD. Okay, so that's one of the main commodities that we know all over the world. So let's move on to the presentation. Okay, so a little bit about myself. I know that some people already knows me, but again, for people that new that joined the webinar, I was an option trader in the commodity market for a speculative fund. I traded oil and sugar for 1 year, and I traded options. So that's very different than trading the direction on the price. But that's what I did for almost 1 year, and I get a lot of experience in the commodity market, especially. So that's why I was very interested by doing this webinar and by talking about commodities. Even I didn't trade gold and silver personally, I know a lot of basics and fundamentals that is very important to start trading those assets. Here at the 5ers, I'm managing the trading desk and the risk management. We have and we must have a proper risk management at the 5ers, because we have a lot of traders, a lot of strategy, and we have to focus on our risk. And that's what I'm doing here, and I'm helping the desk to have a proper risk management here. And yeah, for myself, I'm a trader myself, doing a lot of trading room here at the 5ers on Forex, indices myself, and commodities. Also, I'm continuing investing and monitoring the commodity market. And that will be good, because we can now trade gold and silver at the 5ers, and I will be taking some trades on the trading room here. I made a trading room last Tuesday, and we had some interesting trades on silver and gold, especially on that time that the market is changing all the day, and there is a lot of indication to take from many things. So I also invite you to join my training room on the week. All right. Talking about the 5ers, so it's one of the leading prop firm industry since 2016. We have more than 10,000 traders worldwide. As you can see, we have people from all over the world on the chat. So that's very nice. And we are offering a powerful scaling plan. So people that are successful and know how to manage a good portfolio can grow their account up to seven numbers of capital to 2.52 million for one account at the 5ers. And we also provide trading resources on education. We want to educate our traders. We want to help them to get successful. That's our goal, because the business model is built like we want traders to be successful, as we can share the profit together. And that's the plan. So that's why we try to make a lot of work in trading resources and education. Okay, let's move to the big subject of today and the big title. So we're going to talk about precious metals. So the overview. You know that gold and silver are among the most valued commodities in the world. The main utility is for jewelry, but we will also check after that is not only used for jewelry, it's used for different things, and it's known as a scarcity asset. Okay, it's rare, so we want to. So the supply and demand is also affecting, because the gold and silver have a scarcity value, so that is important to precise. Also in the precious metals, we have other assets like platinum. We have also aluminum, for example. But we're gonna focusing on gold and silver. That are the two most important one. As you maybe guys know, the metals are closely linked to the outlook for the overall global economy. Okay, so that's something also we'll talk just after. But you know that when gold is known as a safe asset, and I will describe and go into the subject more deeper just after. But gold and silver are very linked and closely linked to the overall global economy. And last thing, it's a volatile asset. Okay, we know that commodity is volatile, and it's way more volatile than Forex. Okay, in comparison, I will just after show you a graph that shows the difference regarding volatility in different assets. And that's why we had to make a lot of monitoring, a lot of checks before offering gold and silver to our trader. We don't want our trader to get, let's say, stopped out, or I don't know, getting a lot of volatility and lose their mind on their assets. So that's why we had a lot of calculation and a lot of monitoring before we actually offering these pairs. We were talking about offering gold and silver a few months ago already, and actually it's live, and we are very happy about that. So let's look about the volatility differences we have. As the first volatility, it's the pound New Zealand. We take a random Forex pairs. I know that generally the New Zealand pound, for example, the GBP, let's say the pound yen as well, is also the most volatile Forex pairs. But you see here, like for this is the historical volatility on 21 days with a daily basis, and you see clearly that the historical volatility is approximately 10. Okay, it's going to be the average. Actually, today it's the historical volatility. It's around 5, but on average it can be 8, 9. I believe that might be the average. And then we move to gold, and we see that the volatility is much higher. Okay, there is today the historical volatility is 12, and sometimes it can goes up to above 30. 35, and the average is approximately 20. Okay, so you see that the difference in volatility between Forex and commodities is here. Okay, so that's why you should take care of taking trade in gold and silver, for example, because they have much more volatility than Forex pairs. And for the last one, it's silver, and silver is much more volatile than gold, like twice. You can see that the average, for example, is here on average 30. But it can go to 80, 100 when there is a lot of volatility and pressure, sorry, on the price. Okay, so That's something very important, and that's why we have set the margin requirements and different leverage for that pairs, and that we'll talk at the end of the session. But that's very important to show that we don't want traders to cut their account because of the difference in volatility between those pairs. So that's very important. Let's move on. Okay, so let's talk about gold fundamentals. That's something that you should know by trading gold. There is a lot of different things that we can check and we can verify, but that's maybe the basics, and that the things maybe some of you already knows, but for people that don't know, it's going to be very important. And also for people that knows already, making sort kind of recap, it's going to be interesting. So the first thing is stability. We know that gold is known as a safe haven asset, and it's a hedge against inflation, and that's actually what's going on actually on the market. We are afraid about the increase in inflation, the increase in interest rate, and that's what is going on actually on the market. So that's important to show this. So the first fundamentals aspect of gold is the stability of the assets. Okay, it's not as a safe haven asset, as we know already, and I explained before. It's a scarcity, it's a rare commodity. Okay. The second is physical supply and demand, and what's different, for example, by trading currencies or by trading stocks. There is actually a physical demand for those commodities. Okay, you can actually touch the gold. You maybe have jewelry or a ring that you have, and you can actually touch it. It is a tangible asset. It's different than having a stock or having a dollar, for example. You know, it's a paper. It's a paper asset, but gold have a supply and the demand, a real supply and demand. So it's physical. And we will know that the gold and supply, the supply and demand will have effect on the gold price. Okay, so that's the main essence of how the price can be driven, and that's also the same in other assets like silver, like oil, like sugar. When I traded sugar, for example, that's the second fundamental for gold. And the third, it's a Forex correlation, and you will see that there is a high correlation. Let's say not high, but there is a close correlation between dollar and gold, and the dollar remains the benchmark pricing mechanism for gold. That's also one of the aspects that we should take in consideration by trading gold. Okay, so let's move on to the first aspect, so stability. And here, an example of what is the correlation between the stock market, for example, and gold, and as already known, risk on and risk off market. Okay, so when the stock market is going up, so we are in a risk on environment, and when the market, for example, will goes down, let's say investors want to withdraw the money that they have on the stock market, because the stock market is known as a very risky market and environment. They want to hedge themselves, or they want to invest more on a safe haven asset as gold. Okay, so it's not a 100% correlation, but that's an environment that we should take in consideration, that when the market have high risk, investors want to take actually better safe haven assets like gold, and that's what actually we see. It's also the same for bonds. Okay, when you will see that the stock market is on a high risk, investors want to take position on bonds and gold. Okay, so that's important to show. And here I think that it's very clear to see. It's an example on between 2013 and 2015, but it still happens today. Maybe not has there is different aspects that affect the price of gold, but that's one of the principal aspects. The market have changed. Okay, so risk on, risk off might be not for gold. I believe for gold and indices, American indices, can be a slightly different those times. We know that there are cryptocurrencies, for example, that also can have a new hedge, for example, for inflation. Again, that's one of the main aspects that we know for a few years already, and it's important to show you that. Okay, the second aspect was physical supply and demand. So China is the biggest supplier of gold. They have a lot of mining operations in the country. Most of the mining they have is for producing by themselves, the jewelry, but they have also a lot of exportation. So gold, China's economy is very dependent of mining of gold. So that's very important to know what's going on in China regarding supply. If you heard, for example, that there is a lot of, I don't know, mining problems of gold in China, this may affect the price because China is actually the main producer country of gold, Russia and Australia as well, okay, as you see. And for the demand, India and China are the two biggest consumers of gold by far to other countries. Jewelry related gold demand is driven by tradition, such as wedding rituals. We can see on this picture here, the gold jewelry consumption on the last quarter of 2019. India and China have by far consume 10 more than Indonesia or United America Emirates, and even between 3 and 5 times more than US. So you can see that India and China are the biggest consumer and demand of gold. So also important to mention. So here it's the gold demand over 10 years. And you see that lastly, the demands of gold have reduced on 2020. Maybe I assume that it was of the corona and coronavirus. But still, you see that gold is not only for jewelry, but it's also for technology, as you see here. Okay, of course, jewelry remain the main news for gold. Then there is technology just after, and you see as well that is also an investment. Okay, so people that want to invest on gold and invest on safe asset, you see that it's also a big part of the demand of gold. And central banks as well, they hold big amount of gold in their reserve by security. Okay, they have a lot of gold secured in their banks. I don't know if you see Casa de Papel, for example, but there was a bank of Spain that have a gold. I don't remember if it was the Bank of Gold, something like that. But actually, gold is held physically by central banks, and it's also part of the demand and the gold present in the world. Okay, so that's gold demand. For supply of gold, we already see that China and Russia have the biggest supply and mining operation on the world, and you see that also Australia is leading to a big part of mining. That was different. I think it's the maps of 2020, but it's still very important to follow what China, Russia, and also Australia are doing regarding their mining operation, because it can affect the price in the short term, for example. Okay, let's talk about the production. Okay, I already told at the beginning and explained that supply and demand have a very high role by leading the price of gold. So when there is a lot of demand, so the price will increase, and if there is a lot of producer and a lot of supply, the price might be decreased. But it's only an equilibrium. You have to find if there actually we are in a surplus of demand or in a surplus of supply. And here we see, okay, on the left side, that the production from 1971 to 2018 have risen. Okay, so that means that mining operation have been increased time after time, and it's going to be increased a lot. And we already see just before that the demand for 2020, okay, went down. Okay, so when the demand is down and the supply goes up, okay, so that means we have a lot of gold and no one wants it. Okay, so you can ask me why the price actually on gold goes up. Okay, and there is a lot of different aspects that you should see, but supply and demand is not the main one. But yeah, it's very interesting as well that the cost of mining have been increased. Okay, so even we are producing more gold, the price for producing it is going to be higher and higher after time. Okay, so that's why you see that the price of gold is higher because it costs more money for the mining operation to produce gold. Okay, so it's very important to mention as well But you will see at the end that everything is close together and have a high correlation between things. But yeah, there is a lot of other things to say on gold regarding supply and demand. But it's very interesting to read further and not only focusing on the chart and technical analysis. It's very important to know what you're trading. So that's why I have to put myself on fundamentals before I was trading commodities as well. The last part of the fundamentals of gold is the Forex correlation. Okay, on the left side, you see the correlation with the dollar. Okay, and you see that when the dollar, so actually it's the index of in red, it's the gold price, and the blue is the dollar index. Okay, so when the dollar is starting to gain some value, okay, the gold will start to decrease. Okay, because it will be much hard to buy gold because the dollar is getting higher in terms of value. So when actually you see, and exactly what's happening on the market, actually, you see that the dollar is starting to lose some value. And actually gold is gaining some value. Okay, it's a negative correlation. And the explanation is that when the dollar lose value, you can buy way more than gold. So the pricing of gold has to be adjusted in the market. So that's the first explanation regarding the dollar. And on the right side, you see the positive correlation with Australian currency. We explained just before that Australia have a lot of mining operation of gold in their countries. So that's why their currency is very affected and closed to the variation of gold and opposite. Okay, so when you will see a big movement in Australian dollar, it can affect the gold because, again, Australia is one of the biggest producer of gold. Okay, so that's the explanation of the Forex correlation that we might have on gold, and that's very interesting. Let's move to silver. We talk a lot about gold. Let's talk about his baby brother, silver. The first thing to mention is that there is a high correlation with gold. Okay, it's have the same element. It's also an edge against inflation. There is also a scarcity value. It's also used for jewelry, so it's approximately the same, but not exactly. And I will explain just why after. There is also the physical supply and demand that will affect the price. And the last one is the technology driven. Silver is used a lot for technology and products that use like computer, like photography, for example, that use a lot of silver commodity. So that's the three main aspects regarding silver. So let's talk about correlation with gold. You see on the left side that the correlation with gold is very high. Okay, so when there is a high rally on gold, it will also affect silver. Again, there is no explanation. Maybe it's silver that decides to goes up and then gold as well. But you see clearly regarding those graphs that there is a correlation with gold and silver, and that's actually what we see on the market. I will make a short analysis at the end of the session by talking what actually is going on the market. On the right side, you can check the gold and silver ratio opportunity. Okay, so that's type of ratio that a lot of investors and hedge funds are looking. Gold and silver ratio. That means when the price of gold increase much higher than silver, okay, and you see that the spread here is much higher than, for example, here. Okay, hedge fund and traders want to, let's say, buy the silver and sell gold to tighten the spreads between the two assets. Ratio and spreads between two assets are often checked in big funds and banks to find some opportunity. And here, for example, in 2018 was a good one to sell. Of course, it's a strategy that's used for middle and long term. But here, buying silver and selling gold is one of a good opportunity. So that's why you know that there is a high positive correlation because of their intrinsic value. Okay, because of their value of scarcity and value of metals. when you see a large divergence between gold and silver, you can find some opportunity on the markets. And that's very interesting to show that trading is not only buying an asset and selling it, but it also can be played between different assets. Here, you can actually open a strategy by doing such. Okay, and it might be also the same for Forex. Okay, there is also maybe a correlation in, I don't know, I will just put an example and launch it, but when there is the yen that's going down, and you will see that there is a high correlation between the yen and the Australian, for example. This is only an example, but you can also play with those kind of strategy and those kind of spreads. So that's important to share with you. Okay, so let's talk about the silver demand. You see that again, the demand in silver has grown very highly. Jewelry is still the main demand for silver, and you see as well that electronics and batteries have a lot of have increased a lot in demand. Okay, between 2000 and 2019, but I believe that we are living today in a technology world, and this part of the demand in silver will still increase. And same for solar panels. Okay, we are talking about we are talking about the pollution, and solar panels might be a good switch for oil and pollution, and solar panels also can be highly increased regarding demand. And what is very interesting by looking at silver, you will see that the silver supply is in decline. Okay, so the demand actually in silver is going up, but the supply is going down. Okay, silver supply is in decline. You'll see also that Peru, Mexico, and China are the most have the biggest mining operation of silver, and you see that there is a decline by producing silver in those countries. And you see as well that the total annual global silver supply is in decline here. Okay, so it's maybe much more difficult to mine some silver, and opposite the demand have increased by far, as you see just before. Okay, so that again, those types of resources and charts you can see on from 2000 to 20 years. So it's a graph of 20 years. Here it's 50 years, but it gives you a big picture of what you can expect in the long term in silver. Of course, as a trader, you want this maybe won't help you for making a winning trade in a H1 time frame, but still it's very important to know these kinds of effect and supply demand aspect that can affect the price. So that's why for gold and silver, I think I explained maybe well the let's say the factors that should affect the price of gold and silver. If you have some question on the chat, feel free. I will also have between 10 and 20 minutes at the end of the session to answer some questions that you might have regarding that. And let's move about the trading specification that actually we have at the 5ers, but trading specification is also the same by trading XAUUSD in other broker, in other firms. So here are the contract size, the minimum lot. So the contract size for gold is 100 ounce. Okay. When you trade the real futures, okay, you can only buy 100 ounce per future. Okay. When you trade the CFD, for example, XAUUSD on gold, you can actually buy only 1 ounce of gold. Okay. So that is the advantage of doing that. The incremental step is 0.01. You will see that the price can only move the minimal movement of the price is 0.01. And talking about the margin rate, that is the margin rate that we have set here at the 5ers. It's 2. Okay, so that means if you have an account of 1 to 30 average, when you have a margin rate of 2, it will take twice the leverage that it should be taken. Okay, so if you have here an example, an account of 1 to 10, by trading gold, you will have a leverage of 1 to 5. Okay, and why it's like that? Because we also explained at the beginning that gold and silver have much more volatility than Forex pairs, and that's why we are taking more margin on gold and silver. Regarding silver, that's a bit more complicated because the contract size is 5,000. And the minimum lot is still 0.01, but you have to buy 50 once at the minimum. Okay, so if you make 5,000 divide by 50 by 50, you get this lot. And yeah, the incremental step is 0.001. Again, I will show some real example just after. So by looking at this number, it can be difficult to understand. But you will see the example just after. Regarding the margin percentage, on silver, it's a bit more than gold, 2.50. Again, when the leverage is 1 to 10, you have to divide 10 by 2.5, and you will get a leverage of 1.24. Okay, so that's the margin requirement on gold and silver. And let's move to the movement of tick and movement of price that can affect your P&L and if you have a position. Okay, I know that maybe some people already know how it moves, but it's very important for us to explain for people that never trade gold or still have a bit some issue to understand how the price is moving. So let's take an example. Okay, if the price of gold goes up from 1,820 to 1,820.50, so it's a 50 tick change. Okay, as we explained, there is a 0.01 tick change. Okay, so that's mean here it went from 1,820.01, 0.02, 0.03, so it's got to 50, so it's a 50 tick change. If you buy 0.01 lot, so you buy 1 ounce, okay, you will have $0.50 on your profit and loss. Okay, it's a 50 tick change. You buy 0.01, it will be $0.50 P&L. At the opposite, if you sell 1 lot, okay, you have lose 50 tick, and then you have to multiply the ounce you buy, so it's 50 times 10, and you will have a $500 on P&L losses. In order to get to make it simply, the tick value per lot is $10. Okay, so when the price move from from 1,820.00 to 8,820.01, and you have 1 lot, it will be $10 effect in your P&L. Okay, and then you have to divide. If you buy 0.01, you have to divide it by 100, and it will be giving to you the correct P&L. Okay, so that's how it affects. Regarding silver, it's a bit more complicated. Again, as I explained, you have at least to buy 50 ounces. So you have to make some calculation here. For example, there is 150 tick change, and the tick value per lot is $5. Okay, so if you buy 0.01 lot and the price have changed 150 tick, you have to simply multiply 150 times 0.01, and you will get $7.50. And it's the same for selling 1 lot. On the opposite side, if you sell 1 lot, you know that the tick per value is $5, so you make 150 times 5, okay, and you get the P&L of silver. So again, I want traders that trade those assets to be sure how it can affect the P&L, and don't want you to randomly going on the market by taking a random size. This is very important to. Is there any more? Maybe. I thought it was 10-minute gold. Let me know in the chat if you see a mistake. I don't think there is one, but let me know. I will come back at the end by making those kinds of calculation. But to be sure, there is a minimal of 0.01 lot on gold. And it will affect by 1 cent. Okay, I think it's I think on gold it's the tick value per lot. I don't think there is an error here, but let me know. That's correct. Yeah, here it's a $50 loss. Exactly. You have to multiply it by 100. There is a 1 0 in opposite. That's correct. Thank you, Patrick, for mentioning it on the chat. Here it's a $50 loss. You have only to multiply it by 100. All right, let's move on to the chart of gold and what we can find for. This is the chart for the long term, and the market have let's say a structure momentum. You see that the gold, and also the same on different market, but you will see that the price will consolidate before making a high rally. And actually, okay, as we see at the beginning of 2020, we started to have this kind of market structure. Okay, we cannot know where will be the end, but after the end of this market structure, there will be a high movement. Okay, so generally it gives us the market consolidation we get on the market. And you see that the price of gold have been increasing time after time. There is a large drop from the 2010, from 2010 until 2018, and then the price moves up 2 or 3 years ago. So that's the monthly chart. By looking at the weekly chart, there is different zone that we should take in consideration by looking at the weekly chart. So that's also might be great to again show you the zone I founded. I believe that everyone can see the zone, but it's still good to mention them again. So here at the beginning of the COVID, you see that there was a high volatility here when I think it when the S&P lost like 30%. So it was a high volatility a month here. It's create a demand at 1,440 and then make a all-time high at 280, as you see here, the pin bar here, and it started to decrease and create the flag, as we can see on the weekly chart. And it looks like the demand zone of the 1,700 zone is holding very well. Okay, you see that the zone here is holding very well, touched multiple times on a weekly basis. Still here on October we touch and directly it moves up. There is also a kind of support here on the maybe 1,740, maybe at that level here. There is a nice support, and still you see that there is a flag. The price actually don't succeed to make a higher high and break this kind of trend line. But there is a supply also here. So that's actually the chart on a weekly basis. If you see the silver monthly chart, I just want to see here, okay, there is here 4 types of consolidation market, and you will see here as well on silver it's approximately the same. Okay, so there was still the market is a bit more volatile, as I explained at the beginning of the session that silver is more volatile than gold. It's make a all-time high on 2012, but gold make an all-time high on 2021. Okay. So that's what we see here. It's kind of the same setup of gold, starting a good consolidation with a high support on the 23 levels, I think. 22 levels. And still the price of silver has have increased by far by the beginning of 2020. I think when I joined the 5ers maybe 1 year ago, I made a webinar talking about commodities, and I expect a big rally on whole commodity market because the inflation and because commodities have a big cycle pattern that we can identify. Again, I still expect that those types of assets, also energy commodities like gold, like oil, can still increase by far. So here, here's the monthly chart. Okay. If I move to the weekly, so it's to the monthly, it's way more interesting, and the demand zone of the 20 level still hold. We made multiple touch this week and also last week. It looks like the demand of 2020 is holding well. Actually, the dollar is starting to weaken, so that's why we see silver and gold pushing up. Again, it's also a hedge against inflation, and we see that Fed want to increase the interest rate because of inflation. So there is multiple factors that actually affect the price of gold and silver. But you see that actually it's kind of on a range, but there is a lot of opportunity to make from 22. There is also a level here at 25 that can be very very interesting, and of course the big supply zone at the 28 level. So that's the main domain analysis on gold and silver. I don't want to enter to the daily chart and H4, H1 chart, because that's something I will do on mainly that we will do on trading room and try to find some daily opportunities. But here is the big number that we have to have in the head 22 levels, 28, 2010 for the supply zone. And same for gold. Okay, we have this great support on 1700 zone. That is let's say a big attraction of buyers here that they want to position themselves. Okay, so thank you for being with me today. I will stop the so thank you and good luck of course by trading gold and silver at the 5ers. I hope you will find some good trades here, some good opportunities. I will continue the session for a few questions, so feel free to ask any question you may have. And I hope it was interesting and have a lot of good resources and content in all during all the session. So I'll try to move back to the beginning. When the Dragon Trace script is going to work for gold and silver. It already works. You can already trade gold and silver. I don't know what you mean by Dragon Trace. If it's regarding our indicators, that's something different. But gold and silver have the same use as Forex trading. So you can do whatever you want on gold and silver as okay, so Germantel, it's a tool. That's something I'm going to check. I know that is working very well with Forex. I have to check why this tool is not working with gold and silver. Which fundamental news factors fed the high movement in gold and silver? So if you're talking about what's actually going on gold and silver, there is, I see that, I assume that there is two big factors. The first one is the inflation. We know that gold and silver is a very good hedge against inflation. So that's the first one. And the second one is that the dollar is starting to get weakened. But you see that the three things are correlated together. When there is inflation, so the dollar is starting to lose some value, and then it affects the commodity metals. So I believe that the main aspect for a big push on gold and silver is because of those aspects. And of course, we saw on silver that there is a reduce of supply, and still the demand is high for this. So there is like two different factors that can affect the price of silver actually. Good to include silver and gold. Thank you, Anna. I hope it's gonna. We had a huge demand regarding adding gold and silver, and I hope we're gonna find some trader that find a specialized on gold and silver here. Will you be trading gold, silver during your weekly Tuesday session? Yeah, that's something I will trying to do. I already made. I already trade gold and silver on Tuesday. I found a good buy at the beginning of the week. It was on a good support. But yeah, that's something I will do if I see good opportunities on gold and silver. That's something I will do, and same on the weekly forecast on Monday. Generally, Yaniv is doing this session, so he will talk about gold and silver on a routinely basis, and same on Wednesday regarding risk management on those pairs, because it's a more volatile assets than other pairs. So here the answer, yeah, I will be trading gold and silver in the trading room. All right. Let me know if I see other questions. Okay. Let's say one more question. I see that that there is still a lot of people on the session. Thank you, Johnny. All right, guys. I will end the session here. Thank you very much for being with me today. I'm very enjoying doing this session. Again, gold and silver is a very different asset than Forex, so you can put yourself even more and go deeper into the fundamentals and different factors that can affect gold and silver price. There is a lot of things that I didn't talk because gold and silver, you can talk even 1 week about those commodities. So I didn't go into very advanced talking and explanation, but I believe that what we made today is already a big part of what trade gold and silver is about. So thank you for joining the session. I really appreciate doing this. And again, I wish you success on trading and on at The5ers especially. See you next time and see you next week for the trading room. Have a nice end of the week. Bye bye, guys.